Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. Hey, in this episode, I want to kind of continue the discussion from the last one. We recall last time we talked about our bear case scenario and different paths that might that we might see unfolding as it relates to the potential for weakness in the economy and negative markets. And so in this episode, I want to basically flip and go to the bull case scenario. Now, recall that this is all against our base case outlook for the year, which is modestly positive. So obviously the bull case would be a little bit more positive than that. And we actually sort of tagged it in our outlook report, American exceptionalism. So I want to get into that. Now, I did mention last week with the bear case discussion that it was also influenced by the idea that we have some investors and clients who are really worried about changes that are being made in Washington, D.C. as the Trump administration gets into place and starts implementing the change that they've been talking about. But honestly, the bull case scenario discussion is kind of about the same thing, which is, in this case, maybe the idea that the changes go relatively smoothly and they actually free things up in terms of business happening and things getting done. So anyway, let's get into it a little bit. And so I guess just to start, we know that the administration is focused on deregulation, tax reform, the idea of freer capital markets, and America First trade policy, and improved government efficiency. And conceptually, all those things could spur economic growth and a further expansion in the markets. Now, to get into it in a little bit more detail, when we look at deregulation, for example, a rollback in regulations is typically a positive for the business environment. So it can lead to lower costs on things like compliance. It usually means that executing on business strategies can happen faster, and those lower costs can fuel higher corporate profits. Now, sectors that might be affected by deregulation in a positive way include financial services, energy, and healthcare, for example. Now, next up would be tax reform. So to the degree that the administration can put forward lower corporate taxes, on that side, obviously that means after-tax profits are better because taxes are lower. That can fuel further expansion or hiring, kind of be a positive to the business and to the economic situation. And then on the individual side, if we see sort of improved individual tax brackets, then that might increase disposable income, basically fueling more spending. So the tax reforms could be, and we sort of would expect them to be, additive in terms of the economy. Now, when it comes to mergers and acquisitions, we know that there had been a focus on antitrust and kind of slowing down M&A, that idea of mergers and acquisitions. But obviously, if that focus on antitrust softens a little bit, then that will increase the deal-making activity. It can affect certainly financial services, but probably other sectors like technology, energy, and healthcare, especially life sciences. And so, there's sort of this energy that, with these changes, M&A activity may kick up. In any event, next up would be the idea of strategic trade, policy, and manufacturing. So we know that the tariffs have been in the news a lot with a negative interpretation that, it's going to lead to inflation and it's going to slow down trade and all that. That, at some level, is probably the case if the tariffs are permanent. We continue to hold the view that these are really short-term tools being used for trade negotiations with the goal of improving the U.S. position in trade relations. And that could have a lot of different effects. One could be bringing a little bit more U.S. Or manufacturing onto U.S. shores. And that, would be sort of incrementally additive to our economy, including spurring more jobs. And in terms of the sectors that might be affected, think industrials, utilities, materials are potential areas that might be affected. Now, we know that there's also a shift back towards traditional energy. So specifically, for example, oil and gas, trying to expand and increase production could lead to lower costs on energy, could lead to improve profits and could help ease inflation. And as it relates to investing, of course, you have to be a little bit careful because lower prices is sort of a hit on revenue. But think of it as energy and energy services companies may benefit from this increased production and the demand that might come from it. There's been a continued focus on infrastructure, and infrastructure improvements likely will improve, in turn, economic efficiency. So, a focus on that as well in terms of investing in infrastructure typically means more jobs as that work gets done. And to the degree that things happen more smoothly, that might spur the consumer to be a little bit more active. So think of areas like transportation, the idea of improved digital infrastructure and energy networks. Those are some things in focus as it relates to infrastructure. In any event, last category I'll mention is government efficiency and fiscal discipline. And while this will take some time, we continue to have a view that trying to be better at spending, better at reining in costs, net is going to be helpful to the situation because we've been on a pretty unsustainable fiscal trajectory with big deficits, right? And we can't keep borrowing to fuel that type of growth. If we see this efficiency take hold and an improvement in fiscal discipline, that can strengthen the confidence in the dollar, that can strengthen the confidence in U.S. government bonds, and that incrementally may have a downward force on interest rates a little bit. And so that's just another thing to consider. In any event, just to wrap it up, basically we see emotion, understandably in a way, all over the map. We have some investors we see that are very worried about the incoming administration and the changes that are happening. And then we see others who are really energized by it, optimistic about it. And, obviously at some level, probably end up somewhere in the middle. But as it relates to, kind of chatting through this topic, just this idea that there's a pro-business focus in Washington incrementally is probably supportive of the economy and supportive of the markets. But of course, that execution of policy change has to be done effectively. And so that is one of the big wild cards. In any event, thank you so much for listening to this episode, and we'll catch you on the next one. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.